As of right now, gold is doing something it has only done at history's edge. Not during prosperity, not during booms, not when systems are healthy or stable. It is not just rising anymore, it is accelerating at a speed that matters. Prices are entering territory that would have been unthinkable just years ago. Commentators call it a bull market, a rotation, a hedge against inflation. That framing is dangerously wrong and misunderstands what gold actually measures. Gold is not a productive asset. It produces nothing and pays no yield. Gold exists for one reason only, to measure trust in the system itself. And when gold moves like this, it is telling you trust is breaking. Across every civilizational transition, gold has behaved the same way. It moves first, then quietly, and finally with violent acceleration. Not because gold is special, but because human behavior always repeats. Gold does not rise when economies succeed. It rises when insiders lose faith. Today, we will examine 5 moments when gold screamed warnings first. Each time the system told itself a comforting story while ignoring reality. Each time gold was right and the official narrative was catastrophically wrong. The 2026 surge matters because it appears only in late-stage decay. This is the kind of signal that emerges when empires are already breaking. Gold does not predict collapse, it confirms collapse already underway. By the time gold explodes, the decisions that caused failure are locked in. Debt has compounded beyond repayment, and promises exceed production. Military commitments have already outrun economic and fiscal reality. Gold is not early, not speculative, and not emotional. Gold is honest, and honesty appears only when denial fails. When gold moves fast, insiders are exiting the system quietly. Not retail investors, not influencers, but sovereign actors, central banks, treasuries, and institutions closest to power itself. Signal 1, 1933. Velocity breaks the system. In the early 1930s, collapse wasn't falling prices, but collapsing confidence. After 1929, Americans did something profoundly rational and quiet. They stopped trusting banks without riots, protests, or rebellion. They withdrew paper claims and converted them into physical reality. Dollars became gold as money exited faster than policy could react. This wasn't panic, it was velocity breaking the financial system. The government understood that gold ownership meant loss of control. In 1933, gold ownership was criminalized and seized at $20 an ounce. Once seized, the dollar was devalued to $35 immediately. This wasn't policy failure, it was policy survival. Gold didn't rise because of prosperity, but because failure was complete. Today, confiscation no longer requires force or soldiers. It requires software, ledgers, and digital compliance systems. Inflation quietly erodes purchasing power year after year. Gold rises as markets front-run the next unavoidable devaluation. Velocity is returning, not from banks, but from trust itself. Signal 2, 1971. Repatriation ends the old world. By the late 1960s, America remained dominant but deeply overstretched. Vietnam, domestic spending, and global commitments strained the system. More dollars existed globally than gold backing them. Foreign governments noticed and responded rationally. France exchanged dollars for metal, and others followed. This wasn't hostility, it was arithmetic and accounting. In 1971, Nixon closed the gold window permanently. It wasn't a surprise, it was an admission of insolvency. Gold doubled not because it changed, but because trust vanished. The era of unbacked global currency had officially begun. Repatriation is happening again, quietly and deliberately. China, Russia, and India are not just buying gold, they are bringing it home and reducing dollar exposure. They are preparing for a post-trust financial system. When system guardians stop trusting it, history says, pay attention. Signal 3, 1979. Panic goes parabolic. In 1979, gold did not rise gradually or rationally. It exploded amid geopolitical fracture and energy shock. The Iranian Revolution and Soviet invasion drove panic. gold surged to $850 as the petrodollar fractured. This wasn't inflation, it was systemic decoupling. The Fed raised rates near 20% to save the dollar. The currency survived, but at enormous economic cost. Today's fractures are deeper, broader, and systemic. Trade wars, energy realignments, and parallel systems emerge. But global debt is now an order of magnitude larger. The same medicine cannot be administered again. Signal 4, 2008, when liquidity lied. In 2008, gold briefly fell and confused nearly everyone. Not because it failed, but because leverage collapsed everywhere. During liquidation, winners are sold first to cover losses. Gold bottomed just before quantitative easing began. Then it surged from $700 to nearly $1,900. Printing moved from theory into permanent reality. If gold dips during the next crash, don't misread it. It is not rejection, but the final liquidity event. After this, monetary expansion becomes permanent. History calls this moment the liquidity trap. Those who understand it do not panic, they position. Signal 5, 2025 to 2026, when central banks stop pretending. This final signal is what makes today fundamentally different. Central banks are buying gold regardless of record prices. This is not hedging or diversification, it is conviction. Gold rose over 60% in a single year. Targets once mocked are now discussed openly. Because debt is no longer cyclical or theoretical. It is mathematical and inescapable. When interest grows faster than GDP, there is no exit. Only devaluation remains. Gold is not predicting collapse. It is pricing inevitability. Finally, what is the verdict? Gold at record highs is not an investment success story. It is a warning flare from the system itself. History shows when gold moves this fast, collapse follows. Spain, Britain, and the Soviet Union all learned this. Different systems, different eras, but the same pattern. Gold moved first, policy followed, collapse arrived. Survivors did not wait for confirmation or headlines. They followed the signal while others denied it. In 2026, the signal is deafening and unmistakable. The only question left is, who understands why before it breaks?